Hello everyone, welcome back to my channel. Today, as we're finishing up the first quarter of 2025, I wanted to take a very short look at what's happening in leveraged buyouts in 2025. I just reviewed various publications, so let me show you some data on what's going on right now. And at the end, let's talk a little bit about what are the big questions for leveraged buyout in 2025. So I have, and those of you that followed me for a while, students in my class have seen this slide before, so I usually give the big picture, the last 20 years of private capital. And as you can see here, I have everything in here, from venture growth buyout, real estate, infrastructure, private debt, and so on. So the asset class has grown quite a bit. And obviously, if I fly in here a few bars, so 5, 10, 15 years ago, that's where the industry was. So from cottage industry to pretty much prevalent in financial markets, every investor has a certain allocation to private capital. Nevertheless, as you can also see, it's slowly tapering off. So question obviously, is the Moore's law of private capital still applicable, or have we reached a certain level where growth will be a bit more difficult? Another observation, which really quite surprised me as well, was when I looked at the time it takes funds during fundraising to achieve a final close. In 2023, that number was 21 months. And for 2024, it took 23 months. So for the vintages that started investing in 2024, they were on average on the road for 23 months. Those are in terms of numbers, those are the worst 2 years since we started observing private equity. So that's a long time to be on the road. So that's just as a context. Now, in addition, dry powder. Dry powder has reached a significant number. It has reached a reasonably high percentage of total AUM, with over $4 trillion in dry powder out there. Obviously, questions are being raised. When will private equity start deploying? And the next question that investors in private equity funds are asking: what happens if we get to the end of our investment period, which in our case right now usually is 5 years? What happens if we get there and not all funds have been deployed? Usually, the limited partner agreements will ask for GPs, for the private equity partners, to go back to their LPs and ask them if they want to remain in the fund, waiting for money to be deployed later on. And usually that leads very quickly to a conversation around fees. Now you can imagine in 2025, those vintages that we are looking at are 2021 and older. And some of the funds have still quite a bit of dry powder hanging there from their older funds, making it obviously very difficult for them to raise new funds going forward. Now, lots of dry powder, lots of assets under management has obviously over time driven up valuations. So I'm just sharing here one interesting slide that I saw in the Global Private Equity report that Bain just published last month. So thank you to them and shout out to them. So what they looked at was the median enterprise value over EBITDA, the multiple basically of the investment made, multiples at entry when investments were made by North American and European buyout funds. And this time they split it up into any deals that were in technology and those in the rest of the sectors. And as you can see, out of all the investments made over time, tech had the highest multiple. And if anything, that gap has increased, particularly in Europe. So tech buyouts are more expensive than non-technology buyouts. And I'm just relating what the chart shows. I'll let you basically draw your own conclusions out of that. Now, this is a bit more a high-level overview that shows you that clearly the high watermark that we reached in valuations in buyouts was and remains still 2021. So that's obviously what quite a few investors are still anchored on with regards to valuation as well. So big picture in leveraged buyouts. So to recap, assets under management over $4 trillion. When we look at the last 20 years of growth of assets under management, it has grown CAGR 11% from 2005 till 2025. Net positive cash flows over time, but again here, as the chart shows, so the last 2 years are tapering off, admittedly at a high level. So historically, we have the question, the eternal question has always been, how does private equity perform relative to public equity? And I'm showing here just some data that, again, goes back 20 years, but looks at 10-year horizon IRRs. So you basically take a window of 10 years and roll it forward, compare that to a public market index. So this would be for the US, the S&P total return, S&P 500 total return, so including dividends and all the other payouts that you would have received over time. And as you can see, the outperformance of buyout compared to public markets, while still in existence, has been narrowing in the US. That does not seem to be the case in Europe. So by European buyout funds, which usually are mid-market buyout funds, so usually smaller check sizes, equity check sizes, as in compared to the US, in compared to the MSCI Europe Total Return Index, the gap seems to be, if anything, expanding. So again, just putting some more data to that conversation, who outperforms whom at what point in time. Now, let me summarize where we are right now in the first quarter 2025. We're watching very carefully the number of deals that are being done. Remember, the large amount of dry powder that's out there. Will private equity start deploying? If so, in what industries, in what way? In that context, obviously, we're also watching very carefully what will happen to interest rates and inflation. Please click on the link below to the interviews with my 2 colleagues from the economics department. And finally, what will happen on the exit side? We talked about dry powder, the amount of money that has been raised by buyout funds waiting to be deployed, but also buyout funds are sitting on a large pool of existing assets, companies that they invested in over the last 5 to 7 years. When will basically the exit cycle start? And as always in private capital, we have that flywheel effect. The moment we see exits means money will be returned to the investors, the LPs. The moment LPs see returns coming back, they are more likely to re-up, to invest in future funds, which obviously will then hopefully push down that number that I mentioned, those 24 months that it takes funds nowadays to get to final close. So all those conversations, all those data points are really interesting to observe. And I will try to do every quarter a little review, and we can see the first quarter was quite hopeful. We saw a couple of M&A deals. We saw some buyout deals as well starting to emerge again. So we will see how this all will play out. Obviously, on the exit side, it would be interesting to see the IPO markets starting to open up. Now, that's where the connection point comes to the public listed markets from the private equity side. If you like that recap, please click like below, sign up to my channel so you will get notifications for the next recap that will be published. If you have any particular questions, anything you would like me to do future videos on, let me know in the comment section below. Thanks very much. See you soon.